What's up, you guys? It's Henry. I had a different video planned today, but I decided that I will make a video on the stock sell-off because it's a little rocky. On Thursday and today, Friday, we've had a kind of massive sell-off. To be honest, I'm down tens of thousands of dollars, and it's not easy seeing days like this. But in this video, I'm going to discuss the jobs report, why we are selling off the hardest since June, and what you can do about it. Let's first take a look at what is selling off currently. It looks like Nasdaq is hurting the second day in a row. Ouch, down 4% near the lows, near the bottom, and it's hovering around 10,950 or about 11,000. The S&P 500 is down and the Dow is down. So let me be honest here, guys. The market cannot only go up. That is not possible. The fact of the matter is we have an election in the United States in less than 60 days, and the market just doesn't like uncertainty. And that's because there is a toss-up of who is going to be the next president and what his or her policies will be like. The presidency will influence the US economy, the stock market, and our entire political climate because taxes and jobs will be impacted. Specifically, the reason some of the growth stocks are falling more than value stocks and why I made a video not long ago predicting why we could see a pullback in growth stocks versus value stocks. This has to do with the future expectations. Before I tell you that though, I want to say if you missed that video, here it is right here. And one of the main points was that when it comes to growth and value, you need both. It's not wise to have just growth stocks, and it's also not wise to only have slow growing dividend portfolio stocks either. Unless you're over the age of 65, and even then, I would still recommend having a mixture of both growth and value. You will see my reason for the recommendation there. Essentially though, stocks like FANG, Facebook, Amazon, Netflix, and Google, and of course, the other big growth stocks, Tesla included, fall harder because these stocks are more based on the bright future rather than growth stocks which are based on today's cash flow and current valuation. If I told you electric cars will be mandatory worldwide or could be, that might really swing the value of Tesla, and a presidential candidate who goes into presidency has complete control over a decision like that. But when it comes to Colgate, even if you make brushing your teeth mandatory, I'm pretty sure 99% of people already do that, at least I hope. You get the point. Maybe that wasn't the best example on my channel, but I'm really trying to emphasize the main reason some uncertainty is piling into the market right now. In today's market, we have essentially zero interest rates, and that's been the case for some time. So when you pair that with high growth companies, the valuation can get astronomically high, as we saw with Tesla being over $1,200 price to earnings. Now, the pain happens when the interest rates go up, which I don't expect to happen, or your assumptions about growth change, which can absolutely happen. Look, is this the beginning of a market crash? I don't think so, because the US economy added back a greater than expected number of payrolls in August, and unemployment rate improved by a larger than anticipated margin as employers continue to bring back workers, as you know, the virus kind of related business stuff kind of started to ease off a bit. The unemployment rate came in at 8.4% versus 9.8% that was expected. So in my opinion, that is a pretty good beat, as well as average hourly wages grew 4.7% versus 4.5% expected. That number is above inflation by a good amount, so that is actually a very good thing. Also, if you look at March 20 low, the stock market has just been shooting up and we have not had any major declines since then, besides in early June. So we were kind of due for a bit of a pullback, and that is a natural part of the stock market. I know, I feel like my Robinhood needs a stimulus check today as well. I totally agree, it does not feel good. It doesn't feel good not only because, you know, when times like this happen, your portfolio value goes down, but you also kind of don't know what should you be doing. And is this, you know, is everything on sale, or is this just the beginning of a fire? Well, let's get into that. What I can say is the stock market is full of billionaires and wealthy investors, so the government will do what they can to prop up the market should they have to, and that is both a good thing and a bad thing. Here is what my take is on all of this, and this is sort of a Warren Buffett answer to the stock market and what should we be doing right now. We've had 45 presidents throughout American history, both Republicans, Democrats, from 1789 starting until today in 2020. And of course, the stock market was created in 1817, shortly thereafter, you know, after the 1789 of the first president, George Washington. And since then, since history kind of started for the stock market, it has only really gone up over the long term, despite wars, pandemics, and previously all sorts of disasters such as the Great Depression in 1929, the stock market has always come back and proven to be a moneymaker. And that's exactly what I studied in college. I got a finance degree, and they're just always teaching us stocks for the long term. And that is the same thing that I'm going to say on this YouTube channel. Stocks for the long term makes a lot of sense. And that's because long term, the stock market represents the production of all goods and services by our country. As long as people continue to work and consume, companies and small businesses will continue to make money, and that is what the economy is all about. And unless you think humans are going to stop buying things and all become a minimalist, kind of like me, then the economy should do very well long term, because even though I'm a minimalist, I still obviously spend money. Especially the technology stocks, because although they may hurt in the short term, companies that are internet related are now a part of us. We can't get away from them, and I think they will only penetrate our lives more and more with time. Similarly, innovative companies like Tesla will just be putting out more vehicles out there and will be fine in the long term as well, because people need to travel, and a cost-effective electric vehicle is the future of travel. The risk I do say we have for more pullback is all the government intervention. Printing tons of money isn't a good thing because it leads to unstable economics and could hurt the stock market. That being said, there is no point in trying to predict the stock market, since nobody, not even Warren Buffett, can do that in the short term. So here is my philosophy. Have you guys heard of bulls make money, bears make money, and pigs get slaughtered? Well, I like bulls make money because it makes my life easier and more simple to buy stocks that I like and hold them for the long term. Yes, I'm down an entire Tesla Model 3 in the past couple days, but I am not panicking whatsoever. I'm buying and being very patient. If you want to kind of panic / take profits and kind of wait on the sidelines, I think that is okay if you made significant profits and you don't want to lose more money. But don't be out here trying to be like, yo, I'm about to sell this stock and I'm gonna buy it back tomorrow because it's gonna be cheaper. No, that's more of like a gambling game. You have no idea if that's gonna happen. That does not work very well from my experience or from anyone's experience from what I've heard of. And I've worked with a lot of people through coaching calls, and I've been through a whole finance degree and working on Wall Street. Buying back a stock the next day because you think it's gonna be cheaper is pretty much a 50-50 gamble. Also, just a rule of thumb about options, because I'm creating an options trading course and some of you guys like trading options, so now is actually a very good time to use options to hedge your portfolio. If, for example, you have a massive position, buying a couple put options could help you in the case we have a crash, because it allows you to pick a price to get out at a certain stock. If you're up a lot on a certain stock, you can also sell in the money call options to create a collar. And yes, it's called a collar for your position. And basically that ensures that you can get a valid and good exit price. That is actually something Mark Cuban did when he sold his company to Yahoo. Yes, this is actually a strategy that I've used a lot and what I actually learned at Goldman Sachs. If you want more on this, it will all be in the future course that I'm creating. The free link is in my description. You can join there. And yes, I will have that course out in hopefully 60 to 90 days. And if you really want, I will make a free video on YouTube about collars or exit strategies. Also, if you want to buy something like VIX, which tracks volatility, I personally do not do that, but I have friends that buy the VIX to hedge their entire portfolio. Basically, this is how it works. VIX goes up when stocks become more volatile and fall. Therefore, it kind of creates a hedge. So it's kind of an alternative to buying puts to secure an exit price, except VIX is kind of more of a general market term that just goes up when the stock market generally falls. But ultimately, I just want to say buying and holding is my favorite strategy. You don't need to complicate things. It makes the most sense to me and leads to the fewest long-term mistakes. I hope that was helpful, and you guys really can do whatever you like, and I really encourage you to do your research, but long-term stock picking and holding is my best strategy and what I recommend for most investors. I wish I could just raise the market, but this is part of investing and we need to control our emotions. Stocks don't always go up, and we are really tested by our winners and our losers, and specifically our losers, how we handle those. Because making money is pretty easy, right? I mean, when you make a lot of money, it's cool, it's fun, it just feels like you deserve it. And to a certain degree you do, but when stocks really go down, that is when you really have to test your patience. That's when you have to be strong. And that's when your research And you know, that whole process of picking good stocks really comes into play, because whether you sell in panic is really the game changer. Thanks for watching. Because I wanted to get this video out with speed, it has minimal editing. Hopefully you guys still really enjoyed it. But if you appreciate the hustle, like the smash button for your boy, Uncle Henry, and stay tuned for more videos that are coming very soon. Be aggressive in learning, but be safe in investing. I'll see you soon, champions.